The recent fall in Tesla's stock price has been a shocker to many potential investors. The fear that Tesla is facing a downward spiral has gripped many. Ever since the company's fourth quarter earnings report, Tesla stock has fallen to a 3-month low. What does this mean for Tesla investors? Is it okay to buy, sell, or hold Tesla stock? Keep watching this video to find out more. Tesla continues to make bold strides in the electric vehicle making industry. Based on their fourth quarter earnings report, the EV maker reported a profit on rising deliveries. This profit is a record amount. Despite this, the company continues to face logistical problems that affect the EV industry. In 2022, we may see that the supply chain problems which plagued Tesla last year would continue to affect them throughout the year. Its share price has fallen by 30.9% year-to-date, going from the $1,200 per share price mark at the beginning of 2022 to close at $829.10 per share on the 27th of January. This was just a day after the earnings results were released. Tesla reported fourth quarter revenues of $17.72 billion, up 65% year-over-year, and a record profit of $2.32 billion, up 760%. With an annualized vehicle manufacturing run rate of nearly 1.22 million during the fourth quarter, the EV manufacturer achieved a new milestone for vehicle deliveries with 940,000 in 2021. The impact of global supply chain disruptions and semiconductor chip shortage hampered the results. Global supply chain, transportation, labor, and other manufacturing problems persisted in Q4, limiting our ability to run our factories at full capacity, the manufacturer stated in its presentation. We aim to increase our production as quickly as we can, the company said, not only through ramping production at new factories in Austin and Berlin, but also by maximizing output from our established factories in Fremont and Shanghai. We believe competitiveness in the EV market will be determined by the ability to add capacity across the supply chain and ramp production. Tesla expects to achieve 50% average annual growth in vehicle deliveries over a multi-year period. However, their rate of growth will depend almost entirely on their equipment capacity, operational efficiency, and the capacity and stability of the supply chain. These issues are not going away anytime soon, but if there's one thing we know about Tesla, is that they're masters of innovation. This year might be a tough one for the electric vehicle giant, but they are working as hard as they can to get around the main limiting factor. Their factories have been running below capacity for several quarters as the supply chain continues to plague the industry. Tesla's focus is also on developing its self-driving software and increasing production at all of its facilities. They've said that the full self-driving software remains one of the primary areas of focus. In the long run, the software-related profit is expected to accelerate their overall profitability. The self-driving software is a key component that would revolutionize the industry when perfected. It's essential to improving automobile safety as well as speeding up the world's transition to sustainable energy forms through higher utilization of vehicles. According to its presentation, Tesla has sufficient liquidity to fulfill its product roadmap, long-term capacity growth ambitions, and other expenses. While the company will continue to seek ways to cut production and operating expenses, profits from the software side of the business are expected to grow faster. Tesla will delay the release of the new models until 2023 as a result of persistent supply chain difficulties. On the earnings call, Tesla CEO Elon Musk said that the company spent a lot of engineering and management resources last year dealing with supply chain issues and changing and reducing the number of semiconductors required for car production, allowing the company to increase production. At the same time, other automakers had to cut output. However, due to semiconductor supply limits, even if Tesla had introduced a new model in 2021, total vehicle output wouldn't have changed. Musk has said that if they actually introduced another product, it would demand a bunch of attention and resources from the company. This will result in fewer vehicles being delivered to the market because of the increased complexity of the product. However, the Tesla CEO has firmly stated that they will not be introducing new vehicle models to the market this year. In his estimation, it would make no sense because the company is still facing constraints in the acquisition of parts for production. We will, however, do a lot of engineering and tooling and whatnot to create those vehicles, Cybertruck, Semi, Roadster, Optimus, and be ready to bring those to production hopefully next year, he said. According to Tesla chart analysis, the stock rose by 76% in 2021, hitting an all-time intraday high of $1,243.49 and closing with a high of $1,229.91 on the 4th of November 2021. It is now the fifth firm with a market capitalization of more than $1 trillion. Upon hearing news from Hertz, the car rental firm, that it plans to order 100,000 Teslas by the end of 2022 in North America and deploy new EV charging infrastructure across its global operations, the stock price increased from $909.68 on the 22nd of October. However, Musk tweeted on the 2nd of November that if the increase in the stock price was due to the announcement, the firm had not signed a contract and Hertz would not receive a special rate. Musk tweeted a poll on the 6th of November asking if he should sell 10% of his Tesla stock, adding that he would follow the results of the poll, which had a 57.9% of 3.5 million people voting yes. Musk began selling huge numbers of shares in November and December, according to filings with the U.S. Securities and Exchange Commission, or SEC, though he has also exercised options to buy shares. The stock price plummeted below $1,000 as a result of the big stock sales, and the broader financial markets also lost value as a result of high inflation due to the U.S. Federal Reserve's decision to taper its asset purchases and hike interest rates in 2022. At the end of December, the stock price climbed back above $1,000, reaching $1,999.78 per share on the 3rd of January. However, the stock has since fallen, with the S&P 500 stock market index down 9.8% year-to-date. After the earnings announcement on the 26th of January, the price dropped from $918.40 per share on the 25th of January to $829.10 per share on the 27th of January. According to MarketBeat, the average 12-month price goal from 32 analysts that have made a Tesla stock price prediction is $916.50 per share, with a low of $250 per share and a high of $1,580 per share. There were 14 purchase recommendations, 10 hold recommendations, and 8 sell recommendations. Following the results announcement, at least 6 investment banks boosted their Tesla stock projections. Citigroup increased its price target from $262 to $313 per share, but maintained a sell rating, while JP Morgan increased its price target from $295 to $325 per share, but maintained an underweight rating. Oppenheimer boosted its price target from $1,080 to $1,103 per share while maintaining an outperform rating, while Robert W. Baird raised its price target from $888 to $1,108 per share while maintaining an outperform rating. We continue to believe Tesla's impressive target trajectory for its battery technology, manufacturing capacity, and especially cost could help accelerate the world's shift to electric vehicles and extend Tesla's EV lead considerably. At the time of this video, TSLA technical analysis indicators on all timeframes except 1 month displayed sell or strong sell signals on TradingView. The data showed that the basic, exponential, volume-weighted, and Hull moving averages, as well as the moving average convergence divergence (MACD), were all bearish. According to Wallet Investor, technical support was found at $806 per share and fell to $736 per share, with resistance rising from $876 to $946 per share. The algorithm-based forecasting service anticipated Tesla's stock price would rise this year, approaching the previous all-time high of $1,237 per share by the end of the year. According to Wallet Investor, the stock might be worth $1,654.22 by December 2023, $2,492.72 by the end of 2025, and $2,950.38 in 5 years. It's crucial to remember that the stock markets are incredibly volatile, making it difficult to predict what a share price will be in a few hours, and even more difficult to make long-term predictions. As a result, experts and algorithm-based forecasts can and do make mistakes. Before making any investment choice, we urge that you conduct your own research and evaluate the latest market trends, Tesla news, technical and fundamental analysis, and expert opinion. Remember that past results are no guarantee of future results. Also, never put more money into anything than you can afford to lose. What do you think will happen to Tesla's stock in the future? Comment down below.